The dream of financial liberation began with a ghost and a manifesto in 2009, as the world was still reeling from the catastrophic failure of traditional banking systems during the Great Recession. Into this void stepped Satoshi Nakamoto, an anonymous figure who proposed a radical alternative: Bitcoin. It was designed as a peer-to-peer electronic cash system that functioned entirely without the need for a central authority, leveraging a blockchain as transparent, immutable ledger to ensure that math replaced trust and individuals could finally be their own bank. For a brief moment, it seemed the power had shifted from the glass towers of Wall Street to the laptops of ordinary people. Yet, as the value of these digital tokens began to skyrocket, the ideological revolution was quietly hijacked by the very forces it sought to eliminate: greed, manipulation, and unprecedented fraud. As the technology moved from a niche hobby to a global phenomenon, the trustless nature of the system hit its first major wall, revealing that humans were still the weakest link in the chain. The rise of centralized exchanges like MTGOX created a paradox where, to trade a decentralized asset, users had to trust a centralized middleman. When MTGOX collapsed in 2014 after losing 850,000 bitcoins, it revealed the first systemic crack in the foundation. Rather than retreating, the industry doubled down, entering the era of the initial coin offering, ICO, in 2017. This was the Wild West of finance, a period where anyone with a laptop and a white paper could raise millions of dollars from retail investors. It gave birth to blatant frauds like OneCoin, a $4 billion Ponzi scheme led by the crypto queen Rua Ignatova, which ironically didn't even use a blockchain. The industry had pivoted from a tool for privacy and payments into a high-stakes gambling hall, where the house was often an unregulated entity operating from an offshore tax haven. The true breaking point arrived in 2022, a year that exposed the systemic rot within the crypto ecosystem through a series of rapid-fire collapses. It began with the spectacular failure of Terra Luna, an algorithmic stablecoin that was supposed to maintain a $11 peg to the US dollar through complex mathematical balancing. When the market lost confidence, the math failed, and $50 billion in value evaporated in a matter of days, triggering a domino effect that led to the ultimate betrayal: the fall of FTX. Its founder, Sam Bankman-Fried, had been hailed as the JP Morgan of crypto, testifying before Congress and promising that his exchange was the safest place for investor funds. In reality, FTX was allegedly using customer deposits to fund high-risk bets at a sister company, leaving an $8 billion hole when the music finally stopped. The fallout was catastrophic, proving that the unregulated dream had simply replaced traditional bankers with a new class of actors, who operated with even less transparency and zero accountability. By late 2025, the landscape has evolved into a sophisticated, professionalized version of its former self, where the scams are harder to spot and the stakes are higher. While the era of the celebrity pump and dump has matured, professionalized crime networks have taken their place, utilizing artificial intelligence to orchestrate pig-butchering scams that drain life savings. Over months of psychological manipulation, current data suggests that illicit transaction volume has hit record highs, with scammers moving away from the transparency of Bitcoin to low-fee networks like Tron to launder billions via stablecoins. There is even a rising physical threat, with wrench attacks, the forced extortion of private keys becoming a documented risk for wealthy holders. The technology that was supposed to provide ultimate security has, in a cruel twist, provided a frictionless highway for global organized crime to operate at the speed of light. As we look toward the future, 3 hard truths remain for anyone navigating this space. First, complexity is often a camouflage. If a project's yield or profit mechanism cannot be explained simply, you are likely the one being harvested. Second, decentralization is frequently a myth, as most major projects are controlled by a small circle of developers or venture capitalists who can freeze funds or alter rules at will. Third, trust is a constant in human history. You are always trusting someone, whether it is a government, a coder, or an exchange founder, and the trustless promise of 2009 was a marketing slogan rather than a technical reality. Today, as major banks like JP Morgan begin to absorb crypto infrastructure, we see a repeating pattern. The rebellion has been institutionalized and the scam has simply moved into the boardroom. The ultimate tragedy of cryptocurrency isn't that the technology failed, but that it was used to exploit the very people who were most disillusioned with the status quo. We are left with a sobering warning. There is no such thing as a financial shortcut. The world's greatest scam isn't a specific coin or a piece of code. It is the enduring belief that we can build a perfect system that protects us from our own human nature. If you found this investigative deep dive valuable, please subscribe and share this video to help others stay safe in the digital frontier. Before you go, tell me in the comments, do you think crypto can ever be truly fixed, or was the foundation rotten from the start?